Good morning, everybody. All right. So this measured move that we've been talking about, the possibility of happening, is underway. Well, it hasn't been a smooth one historically, that's for sure. Yesterday was rather wild with the initial move down in the S&P and the Russell. The attempt actually, not attempt, it actually broke lower, then rallying to a new high on the day before starting to move lower again. So the price action in this market has been rather crazy. There's been other markets kind of crazy, but this one seems to be one for the history books. Anyway, I got badly hit with your put spreads, Oliver saying on Netflix. Yeah, well, things kind of fell apart. And Netflix was a couple of days ago was looking great, but that's the treachery of this market right now. And, you know, we know there are price patterns that historically have great odds. And, certain market environments just play havoc with the probabilities. And that's just something that comes with trading. What can you say? That's why we have stop losses and management. And of course, things start to move. As an intraday trader, I want to say you have the option of saying, hey, you know what? I'm not sure what's going on here. I'd rather take a loss at this point, even though any loss, right, is something we don't like at all, of course. But you know what? Sometimes just stepping aside to reevaluate is the way to go. Anyway, I posted a chart of breadth and sentiment at the end of the day, Jacob. Breadth is at a bullish extreme, but sentiment is nowhere near it. So, yesterday breadth was at the beginning of a bullish level, and things bounced up and they wound up falling apart. And, while breadth reaching a bullish or bearish level can have an effect for a day, possibly, or sometimes not at all. The only time we get a true signal is when they both agree with each other. So, and they don't agree with each other. And maybe they will by the end of the week. We'll see. If they do, of course, let you know. So, here, daily chart, of course, gap down, and it rallied almost back to the high of the green bar, which was like, hey, you know what? These buyers, they want to take it higher. And like maybe this pullback was it. And would it be an inside day? And nope. And, rally again. Then the sell off, of course. I was asking what should happen to see QQQ at 260. I'll get to that. So spiders, you can see are down here at poke down to 385.50, which is just below the 50 MA. So when we see intraday patterns or structures, let's say that is an end of day sell-off like this, and then you get a gap down and it's gapping down under the 50, which normally a pullback toward the 50 intraday buyers would show up there. I'd be a little cautious, at the open here, even though things are lower and it looks like they're going to go lower. There's nothing here to the left. That 50 MA is not in alignment with anything. The gap down could bring in buyers to push it back up a bit. SPY higher volume compared to move up. I don't really look at that, Tony. You can say I don't have any volume on here. Kind of, it's a secondary piece of information. And I'll tell you, volume is highly overrated. There are those that look at volume as if it's like, the end all of predictability to price action. And while things go down ideally on lower volume or up on higher volume, which is, what we want to see for a trend move. I've seen markets go down and up on low volume and people call the fact that, oh, this is not a real move or whatever terminology they'll use. I'm like, really? It's continuing to go down. You want to fight that because the volume's low or it's going up? whatever the trend is, it is. And you know what? The thing to pay attention to is volume spikes. So when it spikes way above the norm, it's something to take note of. Other than that, you know, and especially as an intraday trader, I don't have the wherewithal, I guess, personally, to pay attention to volume other than a spike in volume. So, on my futures charts, I don't have any volume. I know there's liquidity there, and so I don't bother with it. I can only focus on so much. Was yesterday's 90% down breath. Interestingly, McGraw posted the chart at the end of the day. And I think the breath was, I can bring the chart up here. The breath was pretty benign compared to what was happening in the afternoon yesterday. But I think that's because, the day started off positively. Right. So there's the chart. And here you can see at the bottom, that was the breath yesterday with only a minus 444, with a range beginning to expand. But I believe, it's because it was rallying in the morning and then fell apart. So there were probably plenty of stocks that maybe didn't get decimated as badly because the day started bullishly and then, fell apart later on. So what we wanted to see, and I think what we will see, things are gapping down. We'll see where they end. But assuming this continues to move lower, what we want to see is a capitulation breath, something like this, or even down around minus 2,000. New low versus new high. Not sure what that means. So, this is, as I said, the day to day. And so I take note of when it reaches, partial extremes. But if it's starting from a bottom, that's exactly what you want to see, is it spike. Some people use that as an indicator. No, I just look at what is and I try to make sense out of it as to why is this, at a level that doesn't match that candle, the bearishness of what happened. And what I said yesterday at the end of the day in the room was, I think it's because the day started off that way. And, a lot of stocks were up and then they eventually fell apart. So, if the market ends lower today and we see that things trend down throughout the day, then I would be surprised to see this not poking down here. So again, we shall see. We shall see. Now, over a period of time, like here, you can see as the market was going up, it was spiking up here, which is what we want to see. You want to see a large participation. And as it started to reach, up here, and it starts kind of petering off, and then as it started to come down, boom. But, the buyers have just been somewhat, let's say, relentless as to buy the dip. And so, yesterday afternoon, no one wanted to buy the dip, even later in the day, where sometimes you get that end of day short covering. It started and then back down. It went back down again. So anyway, you can see sentiment is still up here, and we need to see it poke down into this level, with breadth aligned down at that level too. So sentiment starting to pick up, but we want to see it. These green lines up here, that's what we'd want to see, a spike up into this area, and getting this down here and this pulling back. And then we start looking for reversal days. All right. So let's see the other markets. Futures, I see it right on the 50 MA, and they're not bouncing. So a little bit of slowing momentum to the downside. You can see the distance between the pivot lows on the 5-minute before it reversed, but it's still not able to start pushing up here. But maybe that's the beginning of at least some stabilization, which would make sense that this is on the 50 here. Joe, I don't want to ignore questions. Joe said, if it's supply demand, why would volume not matter? I'm not saying it doesn't matter, Joe. but we can see the relationships between supply and demand by just looking at the price action. So whether this was going down on heavy volume, which is what you would think it would be, or it was going down on light volume, it's going down. So as I'm saying, you want to argue with that, you want to buy it because it's on light volume, be my guest. But when it does spike at some point is where those that were saying, hey, it's at the 0.682 fib level or some extension or some VWAP or whatever, and then when you see it explode down here, and when it reaches the 50 MA or a prior pivot low, it's like, hey, I knew it was there anyway at the right place for the pattern to line up. So it's patterns we trade. We don't trade volume. Right? Volume, as I said, is a secondary piece of information. All right. When would the weekly trend be violated? When it breaks the prior pivot low. So look, it couldn't get above here. It's still in an uptrend. Right. So as it came up here and it poked above the high, we say the momentum began to slow. Major support is down here, the pivot low prior to the higher high. Now, if it comes down to here, there's a pivot here on the daily time frame, right, which is right there. And so this is still an uptrend and it's trending down. And so the issue here historically with these patterns, I'm just going to get my little drawing thing out here. Well, let me get a spotlight. Is these patterns historically getting this lower high, lower low is fine, right? Because it sets up a buy in the weekly time frame. However, the one issue here is the fact that this barely took out the high. So in an uptrend, what we want to see is a prior pivot high taken out with some authority, meaning it got a decent distance above that high. So as it pulls back and this makes a lower high, lower low, it's not a relatively deep retracement even into this area here. So this is beginning to form a trading range versus at this point any type of concern for some giant correction. So I would have preferred that this would have gotten, and everybody was talking about 4,000, and maybe that in itself was a reason that it never got there. But if it would have taken out 4,000 and then the pullback here would have been your normal higher low buy setup versus what's beginning to look like possibly a trading range. Right. All right. Questions here. What should happen? I'll get to the cues. Right. All right. So cues. So one of the things I was looking at this morning, and McGraw, I'm sure you looked at the same. There's no big open interest on the put side on SPX, down below. Not like you would normally see, like, 15,000 or something. There's I had to go down to 3,700 and something before I saw something huge, which I think supports that this market can go lower. And there was a decent open interest on SPX at 3,900. So I think, that suggests that the upside is limited and the downside potentially is sizable. As always, we'll see how it unfolds. Now, the cues here, this bar is not done on the weekly, but this might actually be setting up a measured move lower on the weekly, which would suggest a move down to this 290 level, which is what Jose was asking me. He said 260. I think that's a stretch, just to call it down here, but the measured move would put it somewhere over here. So, hey, let's just see if it gets through 300. Let's see if it gets through here. And so McGraw's telling me that in the cues, 310 has a big put level. And so that's about where it is right now. It's actually breaking right now, moving lower. This pivot low here. And this is not going to actually show up as a pivot low unless, it should show up. I guess as the trading day begins, the software is going to mark that as a pivot low. Right. And someone in the room had pointed out when we were talking about this being potential head and shoulders bottom, right? We needed to see it get above here. Someone in the chat room the other day said, well, what about this little area being a head and shoulders top? And that certainly is what played out. And now it's breaking down below here. All right, let's continue. So yeah, I can get to the negative gamma moves accelerate in the direction. I'm going to watch that thing on Friday because while we've been talking about this gamma for a while, McGraw, it kind of hasn't gelled in my head as to, is it something useful? It's interesting. And some of the things that you've talked about has been interesting, and how it lines up with how we see things. Can it be a piece in that overall analysis? Maybe so. Because gamma is, right, the speed at which prices move. So when you said there's something to do with market makers and all that. And so market makers, they hedge positions, and that can help move things or not move things one way or another. But when certain levels break, everybody has to defend what they thought wasn't possible or was possible. So, all right. So let me continue here. We see where the cues are. So the momentum here, if this it's actually closed now, that bar is beginning to slow to the downside there. Futures, you can see the same story. They're down on this pivot. The Russell, right, beyond the measured move distance. And this is what typically happens, is that the measured move, when it happens, it typically lines up with some support area, and there was no support. So it just kept going down. And now it's down at this pivot low, and you can see there's greater amount of stabilization that's going on here because of what's to the left. All right. Bonds are up here a little bit. All right. They've been bouncing off of this support level. All right. Not a surprise. The 10-year, right, similar, got to the top of that support level versus getting deeper into it. But, we'll see as this bounce begins to lose its upward momentum, and it's probably going to be right around here. If this heads back down, and then we see, this is a weekly chart. We don't know where this will close, but if it is red, if it turns to be a red bar ignored, and then interest rates spike up toward that 2% level. Oil's up here a little bit after getting trashed. Gold popping a little bit here, but overall in the daily chart, really not of interest. I'm hoping it comes down here and sets up a better setup. Silver down on the 200 now. It's just been a mess for a long time. And transports, violating the prior pivot low. Well, it did it intraday and came back up, and we'll see where if this heads lower, other stuff's going lower, market's going lower. Well, you can't argue with it, but this is how we simply determine if something continues to be in an uptrend or not. And so it has been making higher highs and higher lows. The retracement here was relatively deep toward that level. And then it came, bullish 180 back up again. And I think that's it. VIX, send an alert here. If it gets through here, well, that kind of supports, continued downside. And that's the last thing I'll just mention here is keeping an eye on this. We talked about it a couple of weeks ago. Whatever the Fed says, you don't have to believe whatever they say or anybody else. As far as the bull market goes, what'll really unnerve the markets, the 10-year going up and the 30-year going up. Yes, it got it unnerved. That was to be expected. But if you see IRX starting to push up here, you might really see the market get ugly, because then that's saying that the markets, individuals, and just hedge funds are starting to believe that the Fed is going to getting closer to changing their opinion to doing something with short-term interest rates. All yours, Dan.
So Greg, are you meaning that they would be losing control of it?
No, they can't lose control. They do what they do.
Right,
But
by
the
buying.
market would be telling us, whoever that those people are that are, let's say, know more than us, why we look at charts, because there are people that know more than we do. So we look at the tea leaves and say, well, if the 3-month treasury starts moving higher, those that know more than us believe that the Fed is going to or thinking about tightening. If they didn't, this would not start inching higher. So, and you can see it's just been going down forever and being flat. So it's just something to be aware of. Set an alert. You don't have to watch it because it moves so slow. But if it does start going up, that means the yield curve is going to start tightening. And that is going to be an influence on financials and everything. The cyclicals that have been doing well. So it's not happening now. We're in the business of helping other investors and traders know how to look at things in the market. And so that's why I mentioned it. Right.
Yeah, no, that's a good mention. Frank. Yeah, so obviously all our shorts are doing fine. We're getting some nice gap downs on those. Frank, we have a put spread on run. That is on the spreadsheet though. It's in the advisory letter. And the stop is last week's low, so it's still an open position. Mara is a closed position, so that's why it's not an open and closed. We have short positions on ARCG, nice gap down. Disca, we have long puts. Fubo, or short stocks, or tighten the stop on those. KBH had earnings. I like this for a call spread. Let me put these in some windows here. KBH looks good. It's a gap, little kind of head and shoulders here, upside shakeout. It's gapping down on earnings. On this SMH for short, maybe. I think we can find better. I like KBH. Dash, I posted. This thing's gapping down, more controlled. I like Dash better than SMH. Oh, they're well are active this morning. Uber, Netflix, PayPal. Uber, sold off pre-market here and is bouncing. I don't know what to do with that. It's at the bottom end of the range. PayPal, yeah, Greg, remember this one? We were talking about shorting that call spread. That little sell set up there, gapping down. I don't know. I'm not going to be aggressive at the open here because of the gap down. And so many of these things are doing the same. So you just got to put them in a window and let's see how they set up. Netflix, it's range bound. I mean, I have zero bias that I don't know what to do with this. Well, so again, just why I have 6 screens. I put them in a window and see if it sets up. Matt ECEI. We had a MT live called the Turn, TURN, and that's making the turn. I like the weekly. So the answer is yeah, I like it. Yeah, I like it. It's gapping down, which is good. Why is it good? Because if it now turns around and takes out yesterday's high, that means it's ready to go. So yeah, I like that one, man. Jose, TJX, HBI. Yeah, that's a 1, 2, 3 short with a price void. Sure. Yeah, I like that. HBI, same. More just a day trade because you have all the support over here, but sure. So 1, 2, 3. I think TJX has a better price void. Ross, Tell, LYV. We were in that short already. Hey McGraw, do you remember over the weekend you sent me some service that wanted to sell puts on this thing? And I'm like, are you kidding me? It's in, we're shorting it. That it's, I mean, think about it. It closed like that and you want to sell a put with a price void, a breakdown? I don't think so, homie. But you kind of missed your ideal entry. Rost is a 1, 2, 3 also, I don't have time to get into it now. But it's our MT lag on the optometrist, same sector. What you like better, TJX or Rost? I like TJX better than Rost. And finally, you said TEL. Yeah, that's fine. The only thing I don't like is it's a 1, 2, 3 after 5 down bars in an area of support. Um, set an alarm. Maybe I like your TJX the best. TJX the best. Sure, man. Genus, yeah, that's on my list. Oh no, it wasn't Genus. It was another one of these G stocks. Yeah, I just don't have. I didn't have time to get to everything here. Humana, I like over yesterday's high. I posted that as a long. That's a wide range breakout, and I like the fact that it's only going to trigger if it's strong. So I love that additional little insurance policy. So I set an alarm at 417 and, don't worry about it. And GSX, not sure what to do with that. It's down 6 bars, Emmanuel. All right, this I posted, and it's already dropping $2.50. I hate chasing. So let's hold off. Let's hold off on Dash short. I'll keep an eye on it. Uh, all right, so we got Fubo, RG. They're all acting fine. Disco. Let's see. Wow, they're so spready. So we have $8 in the money. Let's try to Disco. Let's try to sell another third here. They're spready. So